Now, the Ugandan Parliament is expected to pass the country's budget estimates for the next financial year before midnight tonight. The $8.1 billion budget for the financial year 2017 and 2018 will focus mainly on infrastructure development like roads, railway and the energy sectors. However, much of this budget is expected to be financed using borrowed money, and as members of parliament move to approve the budget estimates in a few hours, they want government to prioritize on expenditure to reduce the country's debt burden. Well, let's get more on this from Michael Baleke. He joins us in Kampala now. Michael, welcome to the show. Now, looking at this budget, a large chunk of it will certainly be funding recurrent expenditure. The government will also be prioritizing the works, transport and energy sectors. What are the highlights and the concerns with this budget?
Hello, Uche. According to the budget estimates, the priorities of the proposed $8 billion budget is infrastructure, the construction of major highways, the standard gauge railway, then energy and mineral development, which include electricity and oil and gas. Below that, we have education, health and agriculture and the trade sectors, which are the backbone of the economy, but are getting paltry contributions. Uche, while debating this evening, the members of parliament in the House expressed many concerns, especially over the road sector, which has been riddled with corruption scandals. They are wondering whether the money will be put to good use. And secondly, they want government to scale down on public expenditure. They also want government, of course, to highlight the major priorities so that it can concentrate on a few of those priorities and focus on those few. For example, cutting down on, of course, building priority roads like the oil and tourism agriculture sector roads, building a special bank for agriculture to help access to finance, but most importantly, reduce the cost of borrowing that they have termed as excessive for government.
Now, Michael, we know that more than half of this budget will largely come, it's certainly coming from government revenue collections. Now, looking at the last budget, we saw the government did not stick to its intended expenditure plan, and that's because of low collections. That at least is according to Uganda's debt organization. Now, how is this budget expected to play out given these facts?
Well, Uche, Uganda's finance minister says new heavy investments in the country's oil and gas sector will see the economy bounce back and be boosted. Sectors like agriculture will be boosted. Sectors like trade will be boosted. Uganda is also backing this budget on the return to peace in South Sudan, formerly Uganda's major export market, especially for food and the service sector. But also other interventions such as the reduced cost of electricity, which is expected to improve private sector competitiveness and export promotion, which Uganda, of course, is also hoping for a change in weather, that more rains will come and scare away the threat of the ongoing drought. This government hopes this will increase agriculture production.
Now, Michael, this budget will also be funded by external and internal borrowing in the country. Now, the Budget Committee did raise some red flags today. They said the rate at which government is borrowing is unsustainable. In fact, the country's debt is already at about $11 billion US. Now, can Uganda service this debt?
Actually, just to note, Uche, the Uganda Debt Network, which monitors Uganda government debt, says this debt by the end of the next financial year, 2017-2018, may hit about $13 billion US. And just to take you back, 30% of this money, of this budget, is going to finance debt. So, of course, this is worrying, and financial experts are worried about this. They say debt is not bad, but Uganda is poorly managing the resources that it's borrowing, and they're hoping that probably Uganda should borrow and cater for sectors like agriculture, short-term sectors that will bring big wins and quick wins in the future. They wanted to get out of long-term projects because they feel these long-term projects are being are not working well, and Uganda may choke actually on its debt in the coming years.
Now, of course, you know the Parliament is still debating this, but many thanks for those insights, Michael. Of course, Michael Baleke joining us there in Kampala, Uganda.